Welcome back to the Dividend Diplomats YouTube channel. You know you got Bert rocking the OH.
IO.
Oh man, and you got your boy Lanny here, guys. We're talking about two big dividend stocks here in the same industry. And Bert, before we dive in, what do we have to do here?
I don't know. I think, is there some subscribe button that's laying around on the screen that everybody needs to hit? There's also, I don't know, this thing that gives you a nice thumbs up on your video. Everybody, come on, help us out here. This video is going to be a lot of fun. We're not talking about some small time little old dividend stocks here. We are talking about two behemoths within their sector.
Two big stocks, guys. We're talking about big oil. We all know that oil has had a very great year, especially in the earlier parts, of the year with the whole Russia, Ukraine increase in the price per barrel of oil. Obviously, the price per gallon that we are all paying at the pump is still relatively high, fluctuating between $3.50 and $4 per share. Oil companies are actually doing very well from a profitability and stock performance here in 2022. But Bert and I, what we'd love to do is we like to analyze every stock we can here on this channel. We're trying to give everybody opportunities to see what could fit in your dividend stock portfolio as you pursue financial freedom. And we haven't talked about big oil, I don't think, in a while, right, Bert?
No, but yeah, I think it's time to have the conversation, especially with how much it continues to remain in the news, with everything that's going on too, with some of the political acts that were passed in terms of green energy. It's going to impact big oil, but these two companies are still going to find a way to make themselves relevant in the future of whether how much oil it has, how much green energy it has. These two companies are always going to be there. And that's why we need to look at them still if they are undervalued stocks to buy today.
Yeah. And guys, just to give a frame of reference, the two stocks you're talking about, it's going to be ExxonMobil, XOM, and Chevron, ticker symbol CVX. We're talking about Chevron stock, ExxonMobil stock, two of the biggest oil players in the world. Exxon has a $400+ billion market cap. Chevron has over $300 billion in total market cap. So these companies are massive.
They're in all the micro cap and small cap index funds out there. Kidding. Yeah, no, this is big. I know I own both of these. Laney, I can never remember. Do you own Chevron or not?
Do not own Chevron. My wife has, for a very long period of time, has owned ExxonMobil, because they were, when we were building her portfolio, it was primarily based on dividend aristocrats. And ExxonMobil is a dividend aristocrat.
They held on to that aristocrat status. We were all worried about them. We thought they weren't going to do it, but they held on tight at the end of 2020. So just to give a quick recap, everybody, about this, to maintain your dividend aristocrat status, to say that you increase your dividend, you have to increase your payout every single year. So you don't have to increase it every year. You have to increase the payout. So if year one, you earn $1, year two, you earn $1.01. That's 1 year of increasing your dividend when you're working towards aristocrat. And that's essentially what Exxon did. They snuck in that last small dividend increase payment at the last possible second to maintain their aristocrat status. It was a brilliant move by them.
Still keeping the title, can't take it away from them. But Chevron is not too far behind, as you'll see in the metrics, at 19+ years. We do not own Chevron. So, Bert, it's awesome that you own two of the biggest oil companies right there, just really juicing up that dividend.
I think I own all of them. I own Exxon, Chevron, BP, Shell, Total.
Bert drinks oil for breakfast.
Yeah, is this coffee? Is it oil? Who really knows? But all right, so what are we going to do? We're going to look at these companies. We're going to run them through our stock screener, which focuses on 3 simple metrics and a bonus metric. 1, price to earnings ratio less than the S&P 500 and the competition in this one, because we're going to compare these two head to head. We're going to look at then at the payout ratios. That's our second metric, less than 60%. We love that perfect payout ratio of 40 to 60%. Though number 3, history of increasing dividends. We look at a company's 5-year average dividend growth rate and how many years in a row have they increased that dividend. Last but not least, the dividend yield. We look at the yield there after we look at those first 3 metrics.
Bert's not playing around. Cap is flipping back to front, guys. We're talking Chevron stock here, guys, and ExxonMobil stock. Are these two big oil stocks to buy right now? to hold, or are you thinking of selling and taking some of the gains because they both performed very well in the last 52 weeks and year to date, guys? So let's jump into Chevron stock, guys, because I know Chevron stock has been much more popular and, amongst the dividend investing community because of how clean they've been, because of how consistent they've been, especially more recently than ExxonMobil. So Bert, Chevron stock recently traded at $159.97, up 34% alone in 2022, up 66% in stock price since this time last year in September, guys.
You weren't kidding when you said oil stocks are having a great year.
No, and wait till we dive into Exxon stock because, guys, they might have blown Chevron's performance out of the water here.
So let's look at the first metric here. Let's look at the PE ratio for Chevron. Price 159.97, EPS 18.92. That's a PE ratio of 8.46.
So even if in a future period, say that you cut that in half, they're still under 17 PE. So that's a very undervalued price to earnings ratio right now. Maybe that's fairly consistent with the industry. We'll have to see when we dive into ExxonMobil. But guys, that's a solid price to earnings. Diving into that second dividend metric, that dividend payout ratio, which is the safety of the dividend. Can Chevron stock continue to pay and grow that dividend? Well, don't worry. Please rest your fears here. And this is why Bert owns this Chevron stock. They pay $1.42 per share per quarter, or $5.68 per year per share. Taking that over the 18.92, 30% payout ratio, brother.
So let's take what your comment from the PE ratio. You slash earnings in half, their payout ratio is still 60%. So that's what's awesome. Let's move into that dividend growth, that third metric. 5-year dividend growth rate, 5.34%. They've increased that dividend for 19 plus years. They are close to becoming an aristocrat. And I guarantee you, well, I can't guarantee you, that's not the right thing to say. I'm very certain that they are going to become an aristocrat in the 2020s.
Yeah, and Bert, let me ask you this. Based on how oil's done the last 12 months, do you think the dividend increase is going to be a little bit better than 5.34%?
That's what we got to find out. So let's move into that bonus metric, the dividend yield. Their yield after the price has jumped up, yields come down. Obviously, their dividend yield is 3.55%. So if you were to put in $100 into Chevron, you'd be getting a $3.55 annual dividend.
Still, you could argue, it's more than 2x the S&P 500, almost 3 times. So you're definitely getting a decent yield here, Bert. So you want to summarize Chevron stock, their dividend metrics here?
No, but yes, I will. PE ratio 8.46, payout ratio 30, 5-year dividend growth rate 5.34. Increase that dividend for 19 years, yield 3.55%. Let's see how they stack up, though, Annie. You want to kick off the Exxon analysis?
No. Guys, it's time to step in the ring with ExxonMobil, the legacy iconic big oil company. Ticker symbol is XOM, dividend aristocrat status. To be honest, they're not too far away from dividend king status at this point.
No.
But let's talk about them. $96.50. Remember, Chevron stock was up 34%. Exxon says, all right, Chevron, that's cool. Well, we're up 52% this year.
Bang, bang.
And then what was Chevron? What was Chevron's 52-week performance, and what's Exxon's, Bert?
66% is Chevron. So they're like, yeah, we're feeling pretty good about ourselves. Yeah, let's take out the victory cigar. It's been great for Chevron. Everything's been great. Exxon's like, here, let me just clip your cigar. This one's from Cuba. This is we've increased 78.77% over the last 52 weeks. So yep, you take your little baby cigars there. We got our Cubans. We are busting those out.
I do want to say to any shareholder, if you own Chevron stock or Exxon stock during the pandemic, you continue to hold, and even if you were somehow buying more of them, you definitely are happy that you did, right, Bert?
Yeah, I'm very happy. I'm always happy.
Bert is happy. Well, let's dive into that price to earnings ratio. Expectations right now are $12.73 for ExxonMobil. That's a price to earnings of $7.58 based on that share price of $96.50.
After they did their baby dividend increase last year, their annual dividend is $3.52. That's a payout ratio of 27.65%. very much in line with Chevron for both those first two metrics.
Wow. Yeah, very much in line. Exxon is pretty much in line with Chevron stock as well on the price to earnings. Their only difference is about a one. Chevron stock is 8.5, Exxon 7.5. Well, let's dive into dividend growth history. So 39 years of dividend growth. Because as Bert said, that 3% is the 5-year dividend growth rate on average. The yield is interesting here. For that bonus metric, it's 3.65%, just slightly better than Chevron stock at 3.55%.
Yeah, interesting. So all right, I'll summarize Exxon here, and then we'll kind of get to what our final thoughts are. Exxon, PE 7.58, payout 27.65, increase that dividend for 39 years with a 5-year dividend growth rate of 3%, and their yield is 3.65%. That's your face kind of says how I feel about this.
Two solid dividend paying companies in the oil industry. Would you consider them the safest bets in oil?
I probably think that's a fair statement. Especially when you talk about Chevron, how clean their balance sheet is. Look, in the oil sector, there are going to be disruptions over the next decade or two. You're going to need some size. You're going to need some cash. You're going to need companies that can move quickly to adapt to changing regulatory environments, consistently fluctuating oil prices. And these companies have shown that they can deal with the punches that get thrown the oil sector's way.
I know I'm not running to buy oil stock right now. I don't know about you, Bert.
I have a strong allocation of oil in my portfolio already, so I'm good. Not to say that these aren't great companies. I'm just overweight in this sector, and I'm looking elsewhere to help diversify.
And I also own Total and Shell. I have about $12,000 between those two, plus over $6,000 in my wife's account for Exxon. So we're over 18,000 in 3 companies right there. Obviously, very fortunate to have those large positions. That's not even talking about our KMI positions. I know you also own KMI, Kinder Morgan.
Yeah. So I think what we're hearing is we're good. We're good right now. Not to say these aren't great companies. Our buckets are just full for oil. So there's nothing where our gas tanks are filled.
The barrel's full. But guys, if you were to buy one or the other, these are decent prices to buy them at. Obviously not professional advice, but I would prefer Chevron probably over Exxon just based on their consistency through pain. Exxon made it. They're great, bigger market cap. You can't go wrong with either, but I would prefer Chevron probably right now.
Yeah, I dig it. So let us know below. What do you think of these two companies, or are you looking elsewhere in the oil sector? If you haven't already, subscribe to this channel. Give this video a huge, big old-fashioned thumbs up. Thank you, everybody. Excited to read the comments on this one.
Guys, that was another 2 dividend stocks that we here to bring to you and put on your investing table. Hopefully you keep making strong investment decisions, increasing that passive income on the journey to financial freedom, baby. Thanks for riding with the diplomats. That was Bertha, Hurt, and Lanny from the DD. Over and out.